This is Justin on Thursday, January 12th, 2023, looking at SPX again. So today we did end up hitting the 200, finally made it to the 200 SMA. So this was another bullish retest gap, just like we had yesterday. Things were a little more volatile today. So we opened up and immediately just came straight back down. I was really hoping we would get a candle like this right on the 10, but a bullish candle to continue down, or a bullish candle, or I'm sorry, or a bearish candle to continue up. And we did, but it was really a big candle. And so I understand if some folks weren't getting into a trade like this, pretty large range on that bear candle, but it actually would have moved up about an R right back into the open, the previous high. That's a trade you could have set up. It looks like it would have worked. Um, Maybe not so much the option, but I mean, it did move. It did move nicely. So you have to look at that. What I was going to talk about is after we chopped around a bit and kind of went sideways for a little bit here, we did actually put in a hammer similar to yesterday, where we have a bear candle closing above the 10. And I would say probably get in bullish like this and comfortably stop down here. You could be a little more aggressive than that. Could possibly just bracket it. It'd be really aggressive. I think more conservative. Um, the stop would be about the same range as we had for this candle, with a more conservative stop. And that's just kind of the choppiness of the day. I mean, we had some of these bigger bear moves. It makes sense that we could even come up this high and then come down that much, and you wouldn't have been stopped out if we did actually make it down there, but you would if you only put your stop here. So just a couple ways to look at that. If we just look at what this candle was, and I'll redraw both of these here, we can go into the call option. So this is 1039. Let's go look at the 4,000 strike call at 1039. We can see right here, we had put in a low. This low was 1.4. The high of this candle was 2.35. So technically, you'd be really close to a 1R, $100 risk, if you did 2.4 as your limit entry, your stop limit entry. And the stop down here at probably 1.25, 1.3. But pretty quickly you'd be able to move it up to only lose exactly an R. As long as it moves in your direction. If it immediately moves against you, you're wrong. Okay, it's the right setup. In this case, it actually only pulled back to 1.84, and that was the low 1.9 here. So it did end up working, and then I think your target would be the previous high or the previous closes of these candles through this range, right around 6. So you'd be in at like 2.4, and a target of 6 was reasonable, even something a little bit closer. But this would have been your setup. And the difference between the low being below the low here and the below the low here and this option, at this point we're far enough out of the money that there's not too much of a difference there. If you were in a closer strike, you would have a much bigger difference between those candles. So that was one of the opportunities that did end up going bullish. There were some opportunities that came after that. There was drawing back in here. There was this one here. You're breaking out, above this kind of a setup here, and that did continue to run up. So that was another nice one. Then we almost got up to the 4,000 price. It's not quite on the screen here. It didn't quite get that far. Then we ran down. We just rolled right over. So this was a really nice bull trap where we broke out of that resistance, just like we talked about yesterday. We've been doing some things to break through some resistances, continue on going. So this one eventually broke through over here, and we tried to break out again here, and it wasn't having it. This is where we sold off. I don't know if there was any other news or anything else going on. Sold off down to there. Didn't have as clean of a level that we bounced off of with this candle, other than, I guess, technically this same setup. So look at that. It showed up again. You could have had a blind buy really close to the low of that candle with SPX itself. Now, again, if you're looking at the call, you got to look for a lower value to get in, because it's not going to hold that, even the $2 price. It's going to come down even further, especially when you're just taking all of the premium out of this kind of a move. it's going to come back further than you did. And at this point, it was so close to being in the money, and there's less time left in the day. So your entry, if you were looking to just buy it blindly, I would just do $100 risk. And so that's an absolute zero play where you're going to buy at 1 and stop at 0, or essentially no stop, and look for that to bounce. But really, it's a matter of, did it just die? Did we just roll back down? Are we really going to stop at 1? And then, how likely was it we would actually V bottom out of here? I was not looking to buy a low through this. It makes sense. There's so many things. That's what I'm talking through. Came back to this hammer, got the RSI low. It pulled back quickly enough that it's like, oh, well, what if this is just, people getting scared out of it, people taking profits right before it gets to 4,000? It should get bought back up at some amount. I didn't expect this kind of a rally back up, but then I was looking for it to touch 4,000 and then roll down again. It didn't quite get there. It did actually make an ever so slightly higher high. Can you picture how many bulls were trapped right here? After it just sold off right here, people were still thinking, oh, we're going to get up to 4,000. Didn't do it. And then instead of a quick breakdown and sell back down, we just did it gently into the close. And there was actually some bear opportunities over here. So that's the next thing I wanted to point out. We had a really nice bear setup right here. And so I want to talk through this in the context of what I talked about yesterday, where you've just about got the same kind of setup. So picture this flipped bullish, like we did over here, where we're actually touching the 10. We've been in a bull trend. Now we're going to set up a bear trade right here. We're going to look for this to go lower. We're going to look for this to roll down, and whatever it's going to do, let's pick a strike that was in the money at some point today, so it's more likely to get there. So here, let's pick the 39.75. We should be able to get a good setup on this, and let's see how easy it is to catch the reversing trend when it's just getting going. And I'm not even saying that we're reversing bearish. All I'm saying is we've got a bear setup. We've got a double top. This could roll over. Could totally work. All right. That's what some people could be thinking. I've already zoomed in here, the 39.75. This was the, what was it, 124? The candle at 124. Now I got to go back. Hang on. This candle was a, 1324, 124 p.m. And that was right here. Okay. So the high of this candle, the range on this was 0.75. The high was 2.6, so maybe 2.65 would be your entry. And then your stop, well, dollar below that would be 165. For the previous candle, it was already down 1.5. So that's already telling us maybe this isn't a good setup. Maybe this isn't the right option to be in. We want an option further. The other thing to notice with that kind of idea is there's no reversing trend. Like, this is really the same low. Yes, this skyrocketed here. It could do it again. What is it about this candle that's so special? In this case, it's only the 10 EMA setup. So if you had taken that setup and got into this there, and even if you had your stop down here, you're stopped out. It's not that strong of a reversal. You want to wait. So if you're going to pick the reversing pattern or take it the opposite direction of what the general trend has been, wait for more of a retracement. Make sure it's retesting and buy, again, kind of that S curve sort of thing in the reverse. So here's our double top. Now we're going to start to go down. So instead of taking a breakout, which is it moving this way, wait for that S curve to come in and buy on the S curve. Let me redraw this last one. Instead of buying here, wait for the S curve. And if you're buying the S curve portion because you're reversing, that means buying off the 10, buying off the 10. This is just getting going. I wouldn't be buying there. And I'm saying buying puts. That's what I mean. Shorting there is really what I should be saying. So the better setup would have been this one. So let's go look at, the better setup would have been this one, but is that too late in the day? That's a bull candle closing below the 10. Let's go check it out and see if that would have worked better. So this is at 203. So at 203, here's the candle. The range on this was 0.85. Getting in above that candle would be 2.35. Stop would be 1.35. And it would have moved a little bit up to 4. What would your target have been? So 1.2R from this would have been 3.55, right? 3.55. So we did actually get up to that price pretty quickly. That's the previous level here. If you were looking for a bigger move like this spike, it just wasn't the right setup and it's reversing. So just really take the 10 EMA standard setup, which would be 1.2R, but I would have been looking for a bigger move. I would have wanted it to push down lower. It didn't do that. We did get up in the money here on the put, but it actually pulled back again further. Would have stopped you out if you were holding for a bigger target, and then flashed through and then came back down. So the reversing setup, just it's because it doesn't have the trend with it, or it's not following with the trend. You're actually fighting against the premium getting sucked out of the strikes that are out of the money for the puts that aren't that far out of the money. So you get more of these more so spiking patterns. Like this is more of a spike. Here's a quick one. Here's another quick one. And then you're depleting that right back out. So it's more of a trapping setup, getting into something that is in the process of reversing. And if I go back here, if you go back and look at if you go back and look at the open, I think it would have worked at the open just because we gapped up. People are expecting a retest. People are taking profits, but you got to do like a blind sell or a blind buy of the put for a bigger move down like this. And so if we go back to this, this is the same put. It had a much bigger move. We should probably look at one that's less expensive. So let's go look at the 39.50. And even this one, yeah, I'm not sure how you would set this up to buy this. Pre-market level was low down here. I don't know what you would have done to be buying this with $100 risk. So I try not to trade the first 30 minutes. Let the options settle out a little bit. This one was $4. Pre-market low was still down at 2. I don't think I would have traded this one either. So it's just really much harder to be trying to call that move. The only thing you had going for you here is that it's a bullish retest. And so let's see, this is a little better where you've got a low at 1 or at 0.85. So you come almost down to 1. Let me get this spike out of here. Let me redraw or let me zoom in again on this. And then I just want to get the spike. Oops. I just want to get that spike out of there because I can't see the prices. Okay. So the pre-market low is around 0.85. Even if you would set up something to buying within this first candle, so this candle's range was less than 1. Even if you're buying the move above that, that's buying 2.2, stop down at 1.2. And that should have filled you, never actually came back down to 1.2, anywhere near there, and then ran. So you're buying a put, waiting for the first candle. I'm not even saying to do this. All I'm saying is you have a better idea of this going down. Let me go to the daily. You've had this big of a run up right here. Okay. We're gapping up again. We're gapping right on or right below the 200. We're probably going to get some profit takers right out the gate. So that's all I'm saying about looking for a selling, looking for us to sell to start out the day. There wasn't any sort of real strong setup on this 3-minute. All I'm talking through is what you could have done with this option. I actually really like that there's a bear candle there. And so a move above that bear candle would actually be trapping, and that was about $100 risk. So people were selling to get out of this put, and if you're buying here, even this candle is inside same highs. So buy at 2.7, stop down at 1.5, a little more than $100 risk. Sometimes you have to do that on these where it's just that's where the range is. Or if you can try and get your stop at say 1.5, put your entry at 2.5. That should have filled on this candle or on this one. You're not waiting for the breakout though. That's the only issue, is you might be getting into something that's not actually going that way. But that actually would have worked. So on the put itself, and it's not a 10 EMA setup, it's just trapping those sellers, trapping those people selling the put. You're buying a put, they're trapped. If they, if they're shorting it, you're going long the put. It's the same kind of thing. It's just not a 10 EMA setup here. That's the only issue with that one. But it is trapping people because of the direction that it went. Anyway, I've kind of been all over the place on this one. Sorry about that, but there's a number of different things you could have done with trading today, and just looking for the setups that we've been talking about. You can look at RSI and see where those levels are. This was the other really good thing about looking for this to reverse up here, is look how high the RSI was. It was actually the value. So the value is going to show up right here. The value is actually 100. It pegged 100, and it came down to 99.5045, and then down a little bit more. It was pegging 100. When it's doing that, like, let's see the last time it actually tagged 100. There's some high ones over here. At open this day, it was 100, or yeah, right at the open. It still ran up. So if you're anticipating, okay, it should roll soon. Let's see if we can stay on 100, and then all of a sudden it drops into the 80s, and it starts reversing at that point. Here's another day, got up to 100, then it reversed. So the RSI is going to help you. This one's 96. So the RSI is going to help you evaluate, are we at a point? So here's when they were high. We're at 95. We rested some, came back, so we pulled back a little bit, jogged around, came back and tagged the 10. And by the time we were tagging the 10, we were already back down into the normal range, the kind of like, we're not too extreme. And then we continued on up with the way that the ticker moved, but the RSI just slowly climbed here and got back to the point it was overbought, but it was still trending. So that's the difference here. Is this is one like today where we spiked in price, we had a spike down in price, V bottom, right back up. We've gone to the extreme now, going straight up. We could continue that, but you cannot maintain that kind of a trend. Something has to happen to pull back again. And now we're not going smoothly. Like, this is more of a smooth, gradual move up. All of this, you can see where the 10 is coming back in as support, and then it wasn't. This is just flying all around. This is the extremes. People are selling, people are buying. And if you get the same extreme on the RSI, that's another place that's like, okay, we're too strong. This is a point where we're well overbought. Let's see if we can get some selling to come in, or some resting to come in. That's a good time to sell a call above that, or get into some sort of a spread above that, taking in some credit, even same day. And I'm not saying to do that. I've not done that. I don't know which ones to get into. There's some really strong options experts with, if you click the link in the description. Oh, and by the way, if you're here still, we're doing a free week. Click the link, you find the details for a free week, January 23rd to 27th. And it should be a lot of fun to learn things just like this, day trading, looking at the charts, understanding things, asking questions in a live room, just getting a taste behind the scenes. So click the link in the description and come join us for a free week open house, and see if we can learn along with us. So hope this helps. This is Justin. Thanks.